All right, all right. We live, we live. All right, cool. All right, so it's late here in Georgia, and it's 9:47. But I'm trying to hit my California folks. I have a lot of people from California on my channel, and I'm definitely trying to hit more of them. So I figured I'd do one later. Believe it or not, I'd say, man, hey, what's up, Rob? Yeah, see, I'm already getting new people. Rob, where are you from, Rob? A lot of West Coast people that I can't get to when I do my normal live streams at 7. So I want to hit it a little bit later. I just got done working out. Mickey, Bruce, hey, Bruce, where you from, Mickey? I know where Bruce is from. Just got done working out in the basement. We got a treadmill for Christmas. Freaking love it, dude. Walk. I go 4.5, whatever that is. That's like a mile per hour. And I do that for about 7.5 minutes. Then I'm hey, Tina, right on. Yeah, right on. Monterey, there you go. Right on. That's what I'm trying to hit more California people because I tell you, I cannot tell how many people from California reach out to me. It's nuts. Steve, K Paso, what's going on, brother? Angelo. Anyway, so the issue that I'm trying to contend with. So anyway, just got out, just worked out. What I do is I'll jump out of the. So I'll do 7.5 minutes at 4.5 walk, 7.5 minutes at 5.5 run. Do 15 push-ups on my knuckles, and I hold it right, and then Charleston right on, Gary, and then I'll hold it. Do 15 like empty squats, not even a bar, just empty squats. Actually, I was doing with a bar, an open bar. Wisconsin, San Bernardino, Jorge, right on, brother. California, Florida, Comrade Kumo land. That's right. Denison, yeah. Good evening, Terry. And then 6 pull-ups. Sometimes going like that, sometimes going like that. Dude, it's a freaking ass-kicking workout, man. It is an ass-kicking workout. It really is. I was watching. I'm posting some of my old videos. Virginia, Bob, right on. Where you at in Virginia, Bob? I was posting some of my old videos from 2018 on my other channel at Josh Scanlon, Heritage Wealth Planning. Josh Scanlon. And I tell you, I was strong as an ox back then. But Ricky Bro has got to be from Wisconsin. I mean, from Louisiana, right? I know you're not. If your last name is Bro or Levesque or Thibodeau, you're from either Louisiana or Maine. That's all there is to it. If you're in America, Chesterfield, right on. But anyway, I was looking at some of the old videos that, man, I was strong as an ox, but man, my cheeks were, you know what I'm saying? Like a chipmunk there. I was like, damn. And I don't like carrying around that much weight. I like Williamsburg, right? Williamsburg, Iowa. Okay. I like being a little bit thinner, if that makes sense. So anyway, so that's a good workout. So one of you guys told me about it. 15 push-ups, 5 or 6 pull-ups, and then do empty squats, if that makes sense. Whew. Yeah, South Louisiana, right on. Shocking, bro, in Louisiana. And because we have a big French Canadian population up in Maine there, Ricky. So that's why I said if Levesque, Thibodeau, bro, something like that up in Maine, Du Bois. Anyway, so that's pretty interesting, is it not? So anyway, the point was I just got done working out. We got this right on. Let me guess, Alberto's in California. Hey, Al, what do they got to do to? What's the thinking about making Puerto Rico a state? Is that likely to happen or what, man? Washington. What was I getting ready to say? Anyway, so one of you guys sent me this workout. It's freaking awesome, dudes. You do. I'm just telling you, 20 minutes, 30 minutes, 20 minutes, however you do, just nonstop. 5 pull-ups. I do 6. 15 push-ups on your knuckles. Empty squats, run and walk. Whew, it's a freaking butt kicker, man. No, I know you don't want that to happen, but what do you think the likelihood is, Al? I mean, is that something that the Puerto Ricans that are still left there? Someone told me today that Puerto Ricans have lost like 15% of their population or something like that. Hey, Kim. I don't know. That's nuts. And I was reading today. I said all it takes is literally an act of Congress. That's it. Signed by freaking Steely Joe. Couldn't believe it. I said, that's all they need to do is just freaking the majority vote in the Senate, majority vote in the House, and the president signs it to make Puerto Rico. I think D.C. won't pass constitutional muster, but Puerto Rico could. I said, man, that's nuts. And then to separate, like let's just say, for instance, and this, I tell you, man, we'll talk. I want to talk about a couple, PJ. I was who is to separate from your state. Let's just use Northern California wants to separate from Southern California. The drawback there is you got to get the legislature of that state to agree to it. You see what I'm saying? So that is like, I was just reading that today, actually. I was listening to a guy when they're talking about Puerto Rico and DC. I said, this guy seemed pretty confident that Puerto Rico would not become a state. I said, I don't know about that. DC, I'm not worried about. But Puerto Rico, I said, I'm not so sure. Yeah. I'm not so sure about Puerto Rico, though. I mean, it just takes a simple act of Congress. That's not that tough. Anyway, the issue that comes to mind would be is that, well, what if Illinois wants to separate from Chicago, the rest of Illinois? Well, you got to get that's the drawback is once you have these huge cities, they dominate the legislature. And, but you got to, I tell you, here's what I would do. If I were the Republicans and the Democrats make Puerto Rico a state, I would then, the minute I took over the state legislature in Pennsylvania, right? For instance, I'd say we're going to separate. We're going to go into 3 separate, whatever it would be, or Illinois or Virginia, anything like that. The minute I took, Georgia, the minute I took over the legislature and we had a Republican Congress with a Republican president, I'd say, okay, now we control Illinois, for instance. We might not ever control it again. Let's go ahead because that's all it takes. For you to separate from a state, all it takes is for you to get it approved by Congress and your local state legislature. That is it. So if they make Puerto Rico a state, the next time the Republicans get control, and there'll be another time, and I was running the state legislature in a typically New Hampshire, perfect example. We use New Hampshire for that example. They got two senators, but they got a red state across the board. Other than the DC reps are 2 senators and 2 reps. But everyone else in the state is far, far red, deep red. And the governor's Sununu. And I'd say, okay, next time the Republicans take back over majorities in Congress and the Senate, in the House, in the Senate, the House, and then the presidency, if you're going to do that to us Democrats, we're going to do this too. But we're going to be even stronger because you think about it, Virginia, Illinois. Once these guys separate, it's just net gains for the Republicans. I'm not quite sure the Republicans got the gumption to understand to do this, but I kind of think they do. I kind of think some of these guys have been red pilled to some degree, Lindsey Graham and stuff. I think they're trying to, the stupid thing that happened yesterday, I think they're trying to push the Republicans back. So you better go back to your closets and never come back out again. But I don't think that's going to work, man. I don't think that's going to work. I think it might work for a couple of weeks and then it's going to blow over. Then Steely Joe is going to be in charge. And I think the Republican will get a little bit more spine back. It's like, it seems to me there's a little bit more spine. After what they did at Kavanaugh seems to get them spined up. So I'm looking forward to it, man. We shall see. Right on, Bob. All right. So first thing, I'm going to start a new currency, the Shroot Bucks. 1 Shroot Buck. That's going to be, someone just asked about Bitcoin. We're going to introduce the Shroot Buck. My wife got that from work. Oh my goodness. All right. So I want to go into, all right. So what I'm going to do is I'm going to start recording here. And I want to go, and I'm on Zoom, so I got to remember how to do this again. So we're going to record. All right. So what we're going to, hold on a second. What we're going to do is we're going to divide this up into sections so I can put it on my other channel, if that makes sense. And it's funny when you're taking a shower and you have time to think, like, oh, that's what I should be doing. On these live streams, recording it in 3 or 4 different sections and use those as individual videos as opposed to an hour live stream. All right. So, let's 19 opening price right on. Love the Shroot Buck. No, nothing's wrong with Wellesley. Nothing's wrong with Wellesley. Not at all. Not at all. I just everyone says, do I have to? What if is there another fund? So we'll go into that. All right. So let's go into looking at other funds that are similar to Wellesley. And yeah, okay, good. We're recording. Good. All right. So what we're gonna do is I got to share my screen, and I want to share this one, I think. Yeah, okay, good. And we're going to go to Schwab. All right. So this is my Schwab. Hold on a second. All right. All right, hold on. All right. I just want to make sure that you all can see this screen. Shroot Bucks. All right, cool. All right, so basically, I freaking love. Oh, by the way, I got to remind you guys. I think I still have the link. If you guys want, if you haven't opened a Schwab account, I can give you a link and you will make, I think it's like $300 or even $500, man. Something like that. I don't get paid. So it's just my gift to you as subscribers. I forgot what it was. I got to put the link on the account though. I'll put it, I'll remind you, I'll put it on the link on this thing. And I'll just do another video on that exclusively tomorrow. I totally forgot about that. I did a video the other day that says why you need a Schwab account. And I totally forgot. Someone had told me like, hey, send me a link. I can get $500. I said, oh man, that's right. All right. So remember, I don't see your comments right now. So, all right, what we're going to do, here's a Vanguard. So this is everything is available at Schwab. And what I wanted to do is I wanted to, all right, sweet, is go back. Oh, what happened? All right. Yeah, I wanted to go back. So we got Morningstar category, 30-50% allocation equity, all right? Because someone had said the Fidelity Puritan Fund, which is closer to Wellington, not Wellesley. I want to have an inception date of over 10 years ago. I want anything available at Schwab. I didn't really care about expenses. It had to be less than 1%, but we'll get in that. I want 3, 4, and 5-star ratings from Morningstar. And so here's Wellesley, and I'm looking at by inception date right here. All right, so here's the Wellesley, the Vanguard Wellesley, no low transaction fee. So this one is still open to investors. So you could literally buy the Vanguard Wellesley at Schwab. You cannot do that with Wellington. So I was getting a lot of questions like, what's some alternatives to Wellington? And I have some good ones I'll share with you. The Vanguard Wellesley, you can buy at Schwab. I mean, I'm telling you, I did open at all funds at Schwab that you can buy into. So we got no load, no fee. I don't know why this says no load, no. I don't know what this one says. No load, no fee there. No load transaction. Oh, transaction fee. You can buy the Wellesley, but you got to pay transaction fee. That's what it is. I have no idea what it is. I mean, $45, something like that. But you can buy it. That's a fact. So at Schwab, you can buy Wellesley. All right. But then I tell you, man, this one, so a couple of things jumped out at me. The permanent portfolio, I remember that. I was like, damn, I was surprised to see it. So I want to look into that. The USA fund, I could not believe that. The USA fund jumped out. I was surprised by that. And that gets 5 stars. Wellesley gets 5 stars. I've been a big fan of Franklin Income Fund for a long time. It goes back to 1948. It's 0.62% is expense ratio. No load, no fee. And Franklin Income Fund used to be notorious for having a front end load. So that's pretty interesting. So we got some pretty good ones on here, man. We got T. Rowe Price, but the drawback here is these guys only go back to 1990s. I was really wanting something a little bit older than that. So basically, we're gonna go back to these guys right here. And I don't like Putnam. They screwed the hooch back in was it 2000, 2001? I can't remember what the controversy was, but some of these funds were allowing after hours trades for the close of business price. Let me share how this works. This freaking pisses me off that the industry is so damn corrupt. So the market's closed at 4, all right? If you make a trade in a mutual fund after the close, it goes into the next day. All right, it goes to the close of the next day, not the beginning of the next day, the close of the next day with a mutual fund. ETF is different. This is before the rise of the ETFs. So if you were at 420, all right, and you called Vanguard to place a trade, Vanguard said, we'll process that trade at a close of business tomorrow. That's how mutual funds work. What these big managers would do is they'd recognize the market. They place trades at 420 for that day's close. They literally were backdating the trades. Putnam allowed that to happen with the people who had money with Putnam, a lot of money. The big money managers had money with Putnam, were able to place a trade today at essentially the previous day's close. It's completely corrupt. And I'll never forget Putnam for that. I think I'll kiss my butt, man. Vanguard didn't do it. USA didn't do it. Putnam, Oppenheimer, maybe. I can't remember, but I know Putnam did. That freaking pisses me off. I say that's completely, it's crooked. Couldn't believe it. But there's the SEC. They're cracking down. Now, they never crack down, man. But they'll go after you if you're a broker and you say something dastardly like everyone should do a Roth IRA. Oh, wow, you can't say that. All right, so anyway, let's take a look at so we'll start with the Franklin Income Fund. So we're going to look at we're going to go back. Yeah, right here. FKINX. All right. So we're going to go back. We're going to go to FK. We're just going to look FKINX. We're going to go to VW Winks. We're going to go to, what is the other one on here? Then we're going to go to the PRPFX. 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 There we go. And let's take a gander at what these guys have done. We're going to go back to was permanent portfolio, 1989, 1982. Good. So let's go back. Perfect. 1982. So we're going to go back to we can only go back to 1985. We're going to go back to 1985, and we're going to go to the end of 2020. And we're going to see what these guys have done. All right. Now, if we can, while we're waiting for that, let's look at the permanent let's look at Franklin Income Fund. And I've been a big, oh man. Okay. So I got to get it. All right. Hold on a second. We'll come back. So let's look at Franklin Income, Vanguard, Wellesley, and permanent portfolio. And let's see what, so one of these guys is way behind. That's going to be permanent portfolio, way behind. So if you put $10,000 in permanent portfolio, it's worth $116,000 today. $10,000 in Wellesley is worth 200. Wellesley. Yep. I mean, look at that. Wellesley is worth 253. $10,000 in Franklin Income is worth 253. Wait. Yeah, Wellesley is 250. Wait, let's just make sure. Yep. $10,000 in Wellesley is worth 253. $10,000 and I mean that's a significant difference there, my friends. Look at that. I think you got to scratch the permanent portfolio off your list there. I mean, just going back to historical from 1985. That's what's that? 35 years essentially. Yeah, 35 years, and it's just butt ugly, man. So Wellesley has more than doubled permanent portfolio. With the same amount of volatility, it looks like Wellesley has done better than Franklin Income Fund with less volatility. And it looks like, without question. So let's look at the standard deviation. Look at that. Yep. Wellesley has beat those with much less of a standard deviation, 6.61. Franklin Income Fund is 9.46. And the permanent portfolio is 8.34. So Wellesley has smoked these guys with a much lower volatility. Worst year, Wellesley 9.84. Franklin Income Fund is 30%. Permanent portfolio is 8.36. So permanent portfolio did best on the downside, but not that much better. And then the maximum drawdown, this can be from basically October 2007 to the end of March of 2009. Wellesley was down 18. Franklin was down 39, and the permanent portfolio is down 19. So there you go. I mean, that's that. I think that speaks freaking. What else can you look for here? So let's look at 2008. Yeah, right. I guess we already saw that. Let's look at 1990. Look at that. Wellesley was up. Franklin and permanent were down. 87. Wellesley was down in 87. The other two were up. 894. They're all three were down. Wellesley was down the second. 99. Wellesley was down. The other two were up. Let's see right here. 2015, Wellesley was up. The other two were down. 2018, Wellesley, they're all down. It's gonna be tough to be Wellesley. It really is. So let's look at the USAA one. Was the only other one that jumped out at me. USAA growth. No. What was it? Okay, I got. Hold on. Let me stop the screen share for a second and log back into Schwab. All right. All right. Yeah. So that's. I hope you guys are. Look, I'm just telling what I see real quick. I wouldn't. I mean, if Wellesley's still open, I'm not touching. I'm not touching the other two funds. That's for sure. So let's look back at. Come on, man, kill me. Hold on just a second. Let me get to. How do I get back to? Funds. Right, how do I get back? Okay. All right, hold on just a second. Okay, here we go. Sweet. All right. So let's go to my save screens right there. All right, all right, so let me show you what I'm doing here. Oops. Share screen. We're going to go to right there. All right, cool. All right, looks like we're good now. All right, so what I'm doing here is I'm going to Schwab, the screen, the mutual fund screener. And basically what you're doing is you're going to, so you log in, you got research, mutual funds, fund screener. So I mean, it takes some time and hunting, packing and stuff, but mutual funds or research, mutual funds, fund screener. And then I just clicked on, basically allocate. So we start here. I said, I want allocation, and then I want to get rid of everything other than 30, 50. And then there's 192 funds in there. And I said, well, I want all funds at Schwab. I want the expense ratio to be less than 1%. I want it to be 3, 4, and 5 stars. And seems like I want all funds. Yeah, all funds at Schwab. And I want the inception to be over 10 years. And there's 42 matches. And then I just come up here and I say I want to see the inception date because I want a longevity of the fund. And we're going to go back to USA growth. Okay, so USBLX is the USA one, and FA, and then we got the Fidelity FASMX. So bear with me just a second. We're going to go back to portfolio screener, USABX. What it was? What the hell was that? It was USBLX, US Blacks, USBLX. All right. And then we're going to have the Fidelity was Fast Mix. All right. So we got Fast Mix. There we go. All right, so let's see what these guys have done going back to inception. And this is going back to January 1990. So we got 30 years of experience. Let's take a gander. Portfolio 2 is Wellesley again. I mean, just this goes back to 1990 again. Portfolio 2, Wellesley's got the best track record by far. Portfolio 3 was a USAA one. You can't beat Wellesley, man. I mean, this just is freaking stellar. Look at that. We go to standard deviation. Right here. Wellesley's got the lowest standard deviation. The worst year, look at that, significantly lower than those other two funds. The max drawdown significantly lower. I mean, you can't beat that fund, man. Look at that. It's nuts. Better rates of return right here, 8.49, lower standard deviation, lower max drawdown, lower worst year. And one of the reasons for that is going to come back to the fees. If we look at the fees on these funds here, here's Wellesley, 23 basis points. Franklin Income's 3 times that. Permanent portfolio is 4 times that. Fidelity is 3 times that. USA Growth is about 2.5 times that. I mean, that compounds over years, man. You just can't beat Wellesley. There's no other way around that. So I think we can write that one off, that Wellesley is the way to go. Absolutely. Without question. There's just no debate on that. Now, someone could say, what about the Manning and Napier or whatever the hell that, I don't know anything about it. Frankly, I'm not all that interested. What about the Hartford? Hartford's another company that did that back trading too. Freaking pisses me off. Franklin, nope. Thrivent, nope. American Century is okay. Nope. MFS, no. Wellesley is the way to go, and that is just a fact, my friends. All right, so if we click on, seems like I had something else I want to say on that. I can't remember. All right, so now what we're going to do is we're going to go to modify criteria, and we're going to see replacement for the Wellington fund. And the reason we're going to do the Wellington fund is because I'm going to show you. All right. And what we're going to do, let's just make sure we got Wellington on here. Yeah, right there, Wellington. So the reason we're going to do the Wellington fund is because we're going to click on it and we're going to show you what it says. Available to existing shareholders only, right here. All right. That's not what we want to see. That means if you don't own it, you can't buy it at Schwab. Now, I think what you could do is buy it at Vanguard and ACAT and do an account transfer to Schwab, which is probably a pretty good idea, but you can't own it at Schwab. You cannot buy it at Schwab if you don't already own it. And that kind of sucks, man. So that's a problem. Whereas Wellesley, you could. In fact, let's go back. Oh, but let me go back. Let's see what it does here. Actually, let me just, I'm not sure. Yeah, hold on a second. All right. Yeah, there we go. All right, cool. Cool. Hold on a sec. What happened here? I want to go to 3050. I don't see Vanguard on here. What happened to Vanguard? Faulted there. Hold on just a second. All right, there we go. And all right, so Vanguard, when we click on Wellesley, you'll notice it'll say open. So you can buy Wellesley at Schwab right here, availability open. Wellington, you can't unless you already own it, and it's at Schwab. Just keep that in mind. All right, so let's go back. Let's go back to allocation, Morningstar category. We're going to change it to this. Wellington, we're going to do over 10 years. We're only going to do funds that are open to new investors because we just showed you could not do Wellington at Schwab. We don't want one source. We want all funds at Schwab. We want to have an expense ratio of at least of no more than 1%. We want 3, 4, and 5 stars. There's a reason I keep 3 on there. We can get into or something, but I don't want to do fun assets. I guess it already has 5 million in there. All right, so let's just do that. We'll just see what's on there. All right, so we talked about Wellington is not available. All right, so now we got to say, well, what's available? First thing we do is look at inception date. Inception date. There we go. Dodge and Cox balance. Pretty interesting. So let's write that down. DODBX. DODBX. I'm a big fan of Dodge and Cox. Wow, Eaton Vance. EVIFX. And Putnam. I don't like Putnam. I can't do it. I cannot do Putnam. I'm sorry. RPBAX. Was Eaton Vance involved in that scam? I can't remember. Anyway, so now we're going to go to back test, and we're going to look at DODBX. All right. We're going to look at EVIFX, and then we're going to look at RPB. So what we're going to try to do here is narrow down one to compare it to Wellington, if that makes sense. All right. So we're going to look at these guys, go back to 1988, and we're going to see what has done better. And one jumps out, which is going to be Dodge and Cox. Yep, Dodge and Cox did significantly better. 243, the other one 144 and 171. Now, could that be because they took more risk? Yeah, a little bit more risk. Standard deviation 11%, 10%, 9%. So a little bit more risk. Worst year 33, 30, 28. So no one is sitting there saying, "Oh my goodness, my fund did so much better than yours. I'm only down 28% where you're down 33. No one said that. I'm just telling you right now. Not one person said, I'm only down 28 and you're down 33. Put that in your pipe and smoke it. Never happened. Max drawdown, that's pretty significant right there, 46%. So let's keep that in the back of our mind. But without question, Dodge and Cox is the way to go here. So I wonder why that is. What's their, does this show exposure, assets, rolling returns, and returns? Let's just take a look here. Yeah, look at that return. Wow, Dodge and Cox only. I can't. Yeah, right there. Oh my goodness, look at that. it didn't only in 2002 was down 2.94. Now 2008 got spanked. Tells me they probably have a lot of financial stocks in there, but look at that, man. I bet they had a lot of financial stocks in there. And then 2008 they got spanked. Look, 2002 is only down less than 3. That's freaking stellar. And then it was down 2011 and 2015, probably 18 as well. Yeah, all right. A little bit more volatility in there, but dude, that Dodge and Cox is stellar. All right, so let's look at Dodge and Cox, compare that to Wellington. That's nice. Let's see what the expense ratio is on this guy. What are the fees, man? Need the expenses. Is it on here any place? Let me get out of here. I had the expense ratio before. Inception date, expense ratio. Why is it not showing the expense ratio? Okay. Should be something that shows the expense ratio. All right, so let's click on it. 53 basis points. All right, so 1.5% essentially. Okay, good. So now let's just go back real quick. So Dodge and Cox is number 1 so far. So we're going to compare that. Oh man, wait, we're going to go to inception date. Inception date. I'm back at that. Why? Oh, yeah. Hold on just a second, my friends. We'll get there. I'll take you there. Funds at Schwab, 10 years. Right there, right there. All right. I'll take you there. All right, let's go. Let's go, man. All right, so we're going to compare that. Oops, not description, inception date. All right, Puritan Funds, another one people are talking about. FPURX. Invesco, AC. Oh, wait, that used to be ACEIX. I used to own that fund. I used to have clients in that, but it wasn't Invesco. I thought that was Eaton Vance. That wasn't Invesco. They used to be ACEIX. Equity Income Fund. Yeah, I remember that fund. That was a good fund, but it wasn't Invesco. Huh. And then one I want to look at is the Fidelity Balance Fund. All right. Well, I guess we're going to FBALX, and we can look at the Vanguard Starting Fund too, VGSTX. All right. And that will give us enough to go on. I thought, no, it wasn't. It was Eaton Vance Equity Income Fund. I could have sworn. Oh, that's weird, man. All right. Anyway, so DOD BX. FPURX ACEIX. Oops. We'll see what we come up with here, friends. We're going to go back to 1985. 35 years of experience. Portfolio 1. Dodge and Cox. Look at that. All right. So portfolio 1, Dodge and Cox. Again, the best returns, 20% higher standard deviation on the Fidelity Puritan Fund, 20% higher standard deviation. They have 12% standard deviation. Puritan Fund has 10. And then the Eaton Vance, I'm sure it's Eaton Vance, man. Anyway, you can throw that one out. All right. Sweet. So worst year, 46. The forest drawdown. The Eaton Vance had less of a down market in 2008. Max drawdown, so significantly higher for the Dodge and Cox. But I mean, everything got spanked. That's for sure. I tell you, man, that Dodge and Cox balance fund looks pretty attractive to me. Let's take a look. And there's Dodge and Cox got spanked that year right there. Eesh, painful. But look at that, man. Here's 1997, 87 is up, 90 up, 92 for 94 up, 99 up, 2001 up, 2000, 2002 got spanked a little bit, but not that much. 2.94. 2008 got spanked, 2011, 2018. Whoa. Look at that. Oof. And then 2015. So pretty stellar fund, man. That's all there is to it. All right. So now we're going to compare that to two other funds here. Again, this is what we're looking for in lieu of Wellington fund, because you cannot buy Wellington fund at Schwab. And then we're going to compare it to Star Fund, VGSTX. All right, VGSTX. Okay, so it'll be interesting to see Star Fund. So what is going to be our winner? I'm going with Star Fund, believe it or not. What will be our winner here? Oh, man, Dodge and Cox taking the cake. Look at that. Going back to 1985. 1987. And Dodge and Cox, 260, 232, 216. So Star Fund came in the third. Dodge and Cox, higher rate of return, higher standard deviation, higher max drawdown. But I mean, within spit distance, all of the other ones. All right, so we're going to compare Dodge and Cox to Wellington now, and winner takes the cake, huh? All right, let's see. We'll just get rid of that and put this over to 0. All right, so I think we found our replacement for Wellington if we can't buy Wellington. All right. Ooh, Dodge and Cox. Ooh, it's right so doggone close. 410 to 370. Look at that. Ooh, man. But Dodge and Cox, look. Max drawdown, 46% max drawdown for Wellington, 32. Standard deviation for Dodge and Cox is 20% higher than Wellington. And you can see that by the max drawdown. And there you go. Then, of course, Dodge and Cox did better than Wellington totally because it had a little bit higher standard deviation risk. That makes sense to me. Here's Wellington right here. It was down in 1990, down in 1994, down in 2002, down in 2008. Dodge and Cox down in 2011, Dodge and Cox down in 2015, Dodge and Cox down in 2018. Oh, man, that's nuts. Let's go inflation adjusted just to get giggles here. Yeah. That's interesting. Huh. We just learned something today, my friends. Let's go back to 2000. All right, so we've identified, let's go over the last 20 years. I'm going to predict Wellington did better. Let's take a look for the last 20 years. Oh, man, not really. Look at that. Neck and neck. Neck and neck. That's crazy. But standard deviation much higher for Dodge and Cox over the last 20 years than it was for Wellington. Isn't that interesting? It's going to be tough to beat Wellington. All right, let's go last 10 years. 2010, yeah, right? We start to. Yeah, 2011. I bet Dodge and Cox did better. But let's see. Because they had to have a couple down years. Oh, man, just look at that. They look more volatility. Right? No, Wellington did better by $100. All right, last 5 years while we had a market run. Wellington did better. All right, gotcha. Because the Dodge and Cox had some down years that Wellington did not. All right, let's look a little bit deeper at Dodge and Cox Balance Fund. This goes back to 1931. Man. Well, there you go. That's interesting to me. No load. Is there a transaction fee? It looks like a transaction fee. I'm not sure how much the transaction fee they charge. Huh. That's interesting to me. Let's just PGEOX. Let's just throw that in the mix. That's a George Putnam one, the Putnam PGEOX. PGEO. I bet this sucks just because these firms are running, allow scandalous activity to happen. they're going to charge an arm and a leg for their funds. But let's take a look. So that's the portfolio of 3 is a Putnam Balance Fund. Yeah. All right. So Putnam, just scratch them. They suck. All right. So all right. So let's stop there, and I'm going to stop the record. Well, we're going to stop the record there. So I'm going to here just a second. So if you're looking for an alternative to Wellington, it looks to me like Dodge and Cox Balance Fund looks like a sure bet. Actually, hold on just a second. Let me just see what the minimum investment is. Oops, let me share the screen again. Points. Share the screen. And we're going to see what the minimum investment is in this guy. So we're going to click on this here. Oh yeah, $2,500. All right, sweet. Let's just real quick go to holdings. Google, they got Schwab, Bank of America, Wells Fargo, have banking stuff. Yeah, there you go. It looks pretty good, man. Pretty good across the board. They got Google in there. FedEx was up 58.93% last year. Damn. 411 holdings. All right, they do short one stock. I wonder if that's Tesla. What's they got? Your bonds in here. That's the equities that show us the bonds. Why don't they show us the bonds? All right, so I'm not sure what they got for the bonds here. I'm sure it's in here someplace. I just don't feel like looking at it. Take the portfolio. 68% equity, 30% roughly bonds and cash. That's basically 70-30, roughly a little bit more aggressive than Wellington. Turnover isn't high, 35 basis points. That's not much. Assets 14 billion. Let's go to risk and tax analysis here. That's always a problem with when in a non-IRA, you got to be wary of the risk and tax, but not have a turnover. Yeah, so we got right here. Tax cost ratio 1.49. That's actually not that bad on an income-oriented fund. So just not much turnover. Pre-liquidation, 6.78 is the average annual returns. Post-liquidation, when you get your capital gains, you sell. So not much, man. That's a solid fund. I'm glad we did this exercise. That is a solid fund. And that's how let me stop. And that just real quick. So the Dodge and Cox does look to be a good alternative to Wellington if you need to go that route. All right, so let me stop the recording. All right, cool. There we go. And let's see what kind of comments you all have. Oops, what happened? I'm glad we actually did that because that was a very good exercise for me, at least, to say, hey, we need a. There you go. Benedict says, according to Morningstar, they have 17 managers, 11 to 17 have. Okay, so they're like American funds. That's what American funds do. They divide up. They say, look, just buy your best. They get like 4 or 5 managers, 6. They said, we're going to give you 6 of the portfolio. Just buy whatever you want to do. You know what I'm saying? That's good stuff. Yeah, Wellesley is freaking. I mean, look, for a conservative investor, you just can't beat it. There's just no other way. I mean, does that mean you won't be able to beat it in the future? I don't know, but low fees. Vanguard runs it. Wellington Group is the company that runs it. It's just everything for you can't beat Wellesley. All right, so I tried to dodge Cox. Jeremy Rhodes, that's my man from Maine, always telling funny jokes. Mainers. Oh my goodness. See, that's the thing, man. People like these hoity-toity guys will say, you got a stupid sense of humor. You can't even pronounce algorithm or whatever the hell it is. I was saying logarithmic or something like that. I'm like, dude, I'm from Maine, man. People in Maine don't give a crap. I'm just literally, they don't. They're just like, whatever, take it or leave it. That's what makes Maine is so great. They just don't care. Actually, believe it or not, outside of Boston, people in Massachusetts are like that too. They're like, whatever. I mean, you talk to some just regular folks in Massachusetts, dude, you'll be going back in time. People don't care. It's awesome. Getting windy out there. All right. Vanguard's best for index funds, but not. Yeah, I'm not a fan of Vanguard broker. The problem with ETFs, my friends, is that they're just they're just not long enough. I mean, how quickly you might not, but I do. There were no ETFs when I started the business. The iShares was the first one, and no one was. I think it was in '96, and no one was doing. I mean, no one talked crap. No one knew anything about it. And there was no bond ETFs until the mid to late aughts. Literally, I remember this guy from Vanguard, a wholesaler, and I were going around doing seminars talking about Vanguard funds because I put them all in fee-based accounts when I was at Legg Mason, which became Smith Barney, and no one was doing. No one knew what the Vanguard ETF was. And there was no bond ETFs. I remember sitting there telling this guy, I said, dude, you got to get a bond ETF. He goes, no, we're working on it. It was weird, man. And now, they're all over the place, you know what I'm saying? And Vanguard is my preference for ETFs. Look, I like Vanguard. There's no other way around it. I like Vanguard on the Schwab platform. Drawback about the Schwab platform is that if you're going to buy the Wellesley, there is a transaction fee. So every time you pay for it, it's probably $45 a pop, I imagine. I don't know if that'd be if you had an automatic investment plan. I don't know. I have to look into that. Just as we sit here today, I don't know. But that's what you'd have to be considering of. You say, if I buy a Wellington or Wellesley, I should say, on a $100 a month thing or $100 a paycheck thing, am I paying $45 a pop? I bet probably not, but I don't know. Yeah. Look, at the end of the day, my preference is Wellington. I mean, build a salt retirement fund using Wellington. I'm going to do one on Wellesley, by the way. I love Wellesley. I do think there is a lot to be concerned with the market for soon to be and recent retirees. If I had to choose right now between Wellington and Wellesley, I'm choosing Wellesley. I just am. Look, man, we've had a run like we haven't. I mean, literally the run we've had since so let's go back. All right, so let me. All right, we're gonna go back to. Let's go to VFIN. There we go. And all right. So let's just go to all right. There we go. So we're going to look at 3 funds, and I want to show you guys. All right, I think we're good. Let me just double check. I mean, I'm just looking at bear me just a second. I think we're good. I can never tell what screen I'm on. Don't forget to hit the like button, my friends. Like. Paw the like button. There we go. All right, sweet. So we're going to look at Wellesley, Wellington, S&P 500 going back to 1985, which is as early as we can with a portfolio visualizer. And we're going to see the Wellesleys right here, down below a full stock portfolio, which makes sense. S&P 500 is right here. So if you look at the 3, you got Wellesley at 253, starting with $10,000 in 1985. It's worth 253. That ain't bad. Wellington is worth 370, and S&P 500 is worth 489. All right, so after 35 years of experience, we have significant growth, man. Significant growth, which would make sense. I mean, from 82 to 99 was just insane. And if you hated Reagan, you got out, and you hated Clinton, you got out. You made horrific mistakes. Same thing happened though in 2009. If you hated Clinton, you got out. You made a huge mistake, man. Just huge. Not Clinton, Obama, you got out, you made a huge mistake. Same thing happened in 2016. If you hated the Trumpster and you got out because you're like, oh my goodness, he's a fascist and we need to remove him from office, you made a big mistake. Oh, actually, let me hold on a second. It boggles my mind how many people are like, oh! Like they're, oops. All right, we go share screen. There we go. Trump. All right, so we're looking. So this is on the video. We are looking at the Wellesley, the Wellington, and the S&P 500 going back to 1985. You start with $10,000. You end 2020 after Reagan, Clinton, Trump, and Obama, for the most, I guess, what's the word I'm looking for? Not decisive, people that drew the most ire from various sides of the aisle. And yet, if you had $10,000 in any of those three funds, you made 250, 362, and 470. You were sitting pretty, man. Now that's without taking money out, I grant you. But I want to show you guys something. If we go back to right here, all right, so this is 2009, all right. Now, how easily we forget in March of 2009, from January to March of 2009, the market was still getting crunched, all right? But be it as it may, the market came back strong. So Obama takes office, the market's still going south, and everyone's like, oh my goodness, socialism. And then look, at the end of 2009, the market was up 26%. That's the S&P 500. S&P 500 up, 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 down, up, up. Look at that. So from 2009 to 2020, the S&P 500 only had one down year. And that was 4.5%. Now, it did have a 33% decline in 35 days from February to March 20th. February was 9th to March 20th, I think, in 2020. But you'll never see that just looking at this. That's what drives me crazy when you look at these things right here. You don't see the volatility that actually occurred within the year. 1987, S&P 500 was up 4.7. You don't see the October crash. It's crazy, right? 1999, or was it 98? 98 or 99? So the Russian devaluation, the Mexico peso, and the LTCM, I can't remember. Maybe it was even all three. I can't remember. But 98, 99, you don't see, there's some serious carnage in that year. You don't see it, though. You just see ups, like as if the market just goes up, up, up. Now, you do have these three. There's 2001 and 2. You don't see that with Wellington. And you don't see that with Wellesley. Both the Wellesley and the Wellington survived. 2008, S&P got crunched. S&P Wellesley was down less than 10%. Wellington was down 22. All right. And then in 2018, less than 5%. No big deal. So, but the concern I've got, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 years. And we've only had literally one. Yeah, that's right. Don't forget the Q4 of 2018, the market was down 19.4. But we've only had one true bear market. And that was in 2020, when we actually, S&P actually ended up 18.25% on the year. So basically where I'm going with this, in 2015, we had the market in May to June, the market was down about 17% or something like that. 2011, the summer, the market is down about 13% or something like that. But you don't see that in this. You don't see it at all. All you see is this tiny one. That's it. But anyway, the issue is that those weren't, just freaking drop the buckets, man. This one right here in 2020 was a drop, we will never think about, 5 years from like, it's just gonna be water under the bridge because it doesn't show up, because no one can remember this unless they live through it. No one remembers 1998, 1999 unless they lived through it. No one remembers 2011 unless they had clients who were living through it. And you, as I did, no one remembers 2015, but it happened. But anyway, no one's going to remember this. So what happens is the only thing we remember is, look, over the last 35 years, the S&P 500 or whatever, blah, blah, blah. But how soon we forget. Where I'm going with this, though. We still have only had one real bear market in the last 12 years. That's it, man. One real bear market in the last 12 years. Now, it doesn't take a rocket scientist. In fact, I saw last night, don't forget, Shoot Bucks. I saw yesterday the 10-year treasury was above 1%. I was like, damn, dude. That has rallied. The yield, which means the price has dropped. Yep, 10-year treasury is 1.07 is what the 10-year treasury yield is. So I hope you got your mortgage refinance in. 30-year treasury is at 1.85. So, we've had a rally in the yields on the bonds, which is a decline in the price. No idea what that means. But where I'm going with this is, if I am a soon-to-be or just retired person, don't I say, I'm going to cash in some of my chips here, because 12 straight years with only one significant bear market, that's not reasonable. We typically have a bear market every 5 to 5.5 years. Now, one can make an argument. Well, the reason is because we had such a down market in 2008, followed by the down or preceded by the down market in 2002. I get that. And we're just kind of making up for lost decade. I kind of get that, but that's a risk. Is that worth playing that risk? I don't know. So now let's go to. So let's say we took 5,000 a year out, 5%, withdrawal fixed percent. There we go, 5%. Yep. Oops, I'm gonna go fix them out. There we go. We're gonna draw 5,000 a year out. We are going to inflation. Okay, good. All right, so we're gonna draw 5,000 a year out. We're gonna start in 2000. We're gonna compare these guys. Yeah, that looks. Oh, let's start with $100,000. There we go. That was pretty good. All right, so what we're doing here is let's not include year to date. We're gonna start. All right, sweet. There we go. We're gonna take 5% a year out, adjusted with inflation. Yep, at least one of the portfolios did not survive the specified withdrawals. So the end of test period was adjusted to 2016. You want to guess which portfolio that was? It's gonna be the S&P 500. And so here's the S&P 500 right here. You got crunched, man. You got crunched. You got crunched time. Here's Wellesley. Here's Wellington. I mean, the numbers speak for themselves. Now, if you start in 2010 or 11, that'd be 10 years. It probably looks a hell of a lot different, right? Let's see. There we go. Yeah, look at that. That's the S&P 500 right there. You started 2010 or 11, excuse me, and you took 5% a year out adjusted with inflation. S&P 500 is at 253. Wellesley is at 133, and Wellington's at 168. But still, Wellesley has still survived. You're still above where you started, and you still got 5% a year adjusted with inflation. Or 5% a year adjusted with inflation. I mean, so the risk, you can see the risk reward there is that if you would have started in 2000, your goose is cooked, man, after 16 years with the S&P 500. If you would start 2010, yeah, you're freaking loving life, but yeah, all right, you got a little bit, you got more money, S&P 500 than you had in Wellesley or Wellington. But I mean, are we on the, I mean, where's the market now compared to where it was? I mean, that doesn't mean that we're doomsday. It seems to be the market now is not low, it's not cheap relative to what it was 10 years ago, man. And I mean, hell, are we done with the COVID? I mean, my goodness. I don't know what Steely Joe, I mean, he wants to put a freaking mask mandate, even though cases are dropping off. But, just the government has power. They don't want to relinquish it. They're not going to relinquish it easy. And now they got a neutered Donald Trump, it seems like. And, there's going to be no one hold these guys accountable for the next 2 years. And so what do you think that does for government authority? It's certainly going to make it more dastardly. You know what I'm saying? So I don't know, man. I think it's time to if I'm near retirement, I think it's time to really start thinking about going a little bit more conservative. All right, that's let's pause that, see what kind of questions or comments you have. Oops. All right. Oops. Nope. All right. All right. Actually, before I do that, let me just a real quick political rant here, if you would. The lady posted, said, Josh, you flop around more than a fish out of water, because I posted a video yesterday. It says, I'm proud of my being a Republican, and you should be too. And then today I posted another video. It's like, man, the Republicans are like the Washington Generals. And she was like, oh, yeah, you can't make up your mind. So look, at the end of the day, it's the nature of human emotions. I'm up and down. I'm actually pretty fired up right now. I'm not going to lie. I'm not pissed or anything. That I'm behind that now. I'm very much looking forward to 2021 and 2022. The reason 2021 is because those are off-year elections in New Jersey, Virginia, and Kentucky. Maybe I don't think so. Maybe it's Kentucky. Maybe I can't, but definitely Virginia and New Jersey. I don't expect much in either of those states, but I do expect of movement towards the red, which would be good traction for what's going to happen in 2022. I actually think that once we get behind this initial blowback of the Republican Party being pissed at itself and shooting, a circular firing squad, I think we are so much better positioned than we were in 2009 or 1993. You see, a lot of you guys don't remember. We literally thought we were dead to rights back then because we had nothing. We had no state legislatures to speak of. We had tiny minorities in the Senate and the House, and both those it was nuts. And both, Clinton wasn't all that popular, but Obama sure was. Just no one wanted to be a Republican. And I look, stupid stuff in Capitol. I just frankly, just don't care. I mean, I feel bad for anyone who died. And there should be investigations when cops shoot people. I get all that, but at the end of the day, it's just all right, man. I don't want to hear any left wing crap after what we saw for this summer. I'm not in the mood to hear it. I just won't. So I'm not sitting like, oh, I've had 3 people email me saying they're never going to vote Republican again. I said, why? Because of what happened yesterday. I said, dude, did you think I just fell off the turnip truck? You think I haven't heard that? I'll never vote Republican again. Why? Because they did the thing. I've heard that so many times this Sunday. Either they're full of excrement or they weren't Republicans to begin with. I'll never vote Republican because they embarrass me. Just never Trumpers want to take it out on the loyalists to the Republican Party, of which I am. Anyway, I sitting there and I'm thinking we have a 50-50 split in the Senate. We only have a 5-seat voting majority for the Democrats in the House. We have the state legislatures who are going to redistrict. I mean, my goodness, man. Do you really think there's going to be any massive legislation that's going to go through Congress? That's one thing I was wondering about Puerto Rico. That would be a concern right there. I'm not quite so sure. I wonder how that's going to go with the Black community. I'm not quite all that convinced the Black community is going to love having Puerto Rico as a state. That's the thing when you play identity politics, which the Democrats do. Ultimately, you're pitting one against the other. In fact, I was listening to a guy in England today and talk about how the Muslims were protesting against all the crazy, all the stuff from the left. And we won't say more because I want to be banned on YouTube. The Muslims like, I don't want that crap being taught in my schools. And this guy says the Muslims will be the next group of people to leave the Labor Party. And I said, I like that. That's a good way to look at it because there are conservatives that come from other countries, and at some point they're going to see the left go too far, and that's going to open up the corridor for mainstream. What I liked about another guy I was listening to, guys like libertarian republicanism doesn't work. I actually completely agree with that. Populism works, and the reason I say libertarian Republican won't work is because libertarianism doesn't work. What I'm saying, I wish it did. But for urban voters who are on the fence, entrepreneurs and stuff like that, the libertarian is just dominated by wealthy white suburbanites. It's just all there is to it. The Libertarian Party, that's why they were so big on throwing in with BLM this summer, because they know the libertarians are just white, wealthy suburbanites. There's not all of them, but the vast majority, college educated, highly credentialed, college educated, white collar, wealthy suburbanites. That's the Libertarian Party for you. Sad, but it is. And that's never going to appeal to making inroads with blacks, making inroads with Latinos and Hispanics. That's not the crap they want to hear. And to some degree, they might be, but it's populism that's going to win. And I literally, truly think that the Republican Party is going to go more populism. There'll be less in your face about law and order, which is good. You see what I'm saying? I think after this stuff in Capitol Hill, they're going to say, and then the stuff with the COVID-19 police restrictions, I think a lot of Republicans are going to be like, I'm not throwing in with that. I don't want to be the law and order party if that's the law and order that I'm expecting. I don't like that at all. And I think that, I tell you, man, I'm pretty excited. I think there's a lot of good stuff here. The Republican Party is stronger now. Stronger in some regard than they were in 2016 when Trump won. Not quite. Because we did have the House, but we had it with rhinos. You know what I'm saying? We did have a Senate, in which we lost the Senate, we lost the presidency. we've lost some state legislatures, but this stuff happens all the time in politics, man. In politics, you know, the out of power party wins and off your elections. It happened this year, it happened last year. I mean, 2018, it always happens. This year, the Senate went to the Democrats. That should have gone to the Democrats in 2018, but it went into 2020, which frankly is better because we were able to get 2 more years of judges in there. That's fantastic, man. Anyway, I look at the Republican Party. I said, man, we are so much stronger than a lot of people are letting on. You don't understand how bad it was in 2009. It's like, you know, on the back of the National Review, they had advertisements, you know, touting Obama. And the National Review, crazy, man. In 93, like no one wanted to. I mean, again, I read that article from the Washington Post the other day, you know, from 1992, and they're talking about Jack Kemp because he can be a moderate, you know, with the Republican Party. They're too far right, you know, they're blah, blah, and they've been saying this. They said that in 2009. We got to reach out to Hispanics with illegal immigration. And Trump reached out to Hispanics without illegal immigration in terms of we got to legalize everybody. He said no, and he made huge inroads with Hispanics that a lot of people said never could happen. And it wasn't because he was spouting legalizing illegal immigrants. I'm telling you right now. And the Republican Party would be stupid, and I wouldn't surprise if they did, to consider going that route that they did with John McCain, Lindsey Grahamnesty, Mittens from the old days, where we got to legalize these people so that way we can make inroads with them. No, Trump made inroads going the exact opposite. And that's the lesson we learned. I think enough Republicans are going to do this. So one of the things that we really got to start doing is you really got to start looking at who is running in your state legislation, and I mean, look, you stop this focus on the Senate and the president. You got to focus on your local legislation. And so I'm going to be looking around this year and seeing who's up for, you know, I can't remember 2022, what the state house is. I have to see what Georgia is up. And I'm sure there are some seats up in Georgia in 2022, and start looking at the vulnerable Democrats that could be taken out. Like we got a lady in the next district over who won her congressional seat, you know, by a sliver. You know what I'm saying? And that she could be taken out. My own rep, Lucy McBath, she won pretty handily this time, which kind of sucks, man. That kind of sucks. She barely squeaked by in 2018. This year, she won a lot more solidly. But 2022, maybe not. And if Republicans are going to take the House, these 2 districts we need to get. We need to get Lucy McBath out of there, and we need to get Carolyn Bordeaux out of there. It got to happen. If we can't get those, we're not going to take back the House. That's all there is to it. So, but then you got to even go down ballot. Who's running for freaking county commissioner? As we can see now, the county commissioner plays a big role in things. Who thought? Secretary of State, public health people. If they run in who would have thought public health authority would have so much power over your life? It's nuts. I just think there's an opening that a lot of people on our side of the aisle have, myself included, previously would not have seen before. Now we've seen it. And we've seen that, you got to hold people accountable, man. And unfortunately, Trump isn't going to do it. Mitch McConnell's not going to do it. Kevin McCarthy's not going to do it. It's got to be you. You got to hold them accountable. And the way you do it is the ballot box. Secondly, only an idiot Republican would ever not push now hard and heavy for voting security. If there's ever been a wake up for anybody on the Republican Party, is that voting security needs to be front and center, or else they're all going to lose. And so if you're wanting to get rich in the politics, like a lot of these guys do, because they watch Steely Joe and he made bank. Him and Hunter made bank without question. Harry Reid made bank. Trent Lott made bank being in politics. Robert Byrd made bank. That's the way it works, man. You go into politics and you get a lot of money. People spend lots of money, and you get to keep your war chest of all the campaign contributions you don't spend. You get to keep it. It's crazy. But be it as it may, that's the nature of the beast. So if you're a Republican legislature or office holder and you want to stay in there because you want that sweet, sweet money from being a political hack, well, hell's bells, man. You better freaking get the vote secure, or else you'll easily be put out to pasture because of an insecure vote, if you know what I'm saying. So no Republican that's got 2 brains is not going to say, yeah, we need to make sure. And if you're controlling the governorship and you're controlling the House and the Senate, like in New Hampshire, you better get that vote secure, man. That's what they are in New Hampshire. You better make sure you got a clean and fair vote. And looking at Kentucky, I'm just using that. They have a Democratic governor. Once you get that governor back, you better freaking number one thing is make sure that the vote's secure, and no Republican. If any Republican sitting on the fence there, it's just is an idiot. That's all there is to it. So, all right, let's see what kind of questions you all have, or thoughts or comments here. All right, let me. There we go. All right, cool. Stop that. Oops. There we go. Good. All right. Yeah, enough cash to 3 to 4 years of income, Kim. Absolutely. I 100%. That's my go-to thing. 3 to 4 years cash, the rest S&P 500. I completely think that's the move. As long as you have the 3 to 4 year cash, absolutely. Yeah, right on. No one ever said I don't have enough cash. Exactly. Tim says the bench is much better for the Republicans. Could not agree more. Just think about it real quick. You think about it, Sniffy Joe isn't going to stay for 4 years. They're going to get Kamala. She's not going to be has the power of the incumbent in 2024. She won't. She'll be selected, not elected. It's just a fact. And if you don't have the power of the incumbency, you lose some of that street cred of being the incumbent. I mean, she will literally be the incumbent, but she wasn't elected. She wasn't, just wasn't. So because of that, she doesn't have the same street cred as an incumbent. She just won't. She'll be like a Gerald Ford, essentially, if that makes sense. Now, look, at the end of the day, the Republicans got to recognize we have huge headwinds in the media, entertainment, the sports industry, and all that. Huge headwinds. You know what I'm saying? But, we've overcome that before. We'll do it again now. It's even easier now with this. I know YouTube is probably going to purge a lot of us. I get that. Facebook is I get all that. But there are alternative sources now. Parler. I mean, for the love of me, I don't know why any conservative would be on Twitter now. I don't get it. Why would you do that to yourself? Makes no sense to me. Parler, I'm on Parler. MeWe is a Facebook alternative. I'm on MeWe. I'll set up a Heritage Wealth Planning MeWe page here shortly. Rumble, all my videos I post on Rumble because I fully expect that if you say anything that's negative on Sniffy Joe or Kamala, you'll be banned. I completely expect that to happen. But there's ways to get your word. And of course I got my website, which I host. And so it's just, there's other ways to get the word out there. It might take a little bit longer, right? But there's ways to do it. There's ways to do it, man. Yeah, Kim, I've never had a client say, I can't sleep tonight. I have too much cash. Yeah, it's funny. Silver Turtle says he didn't hear any Democrats calling out to defund the police yesterday. Isn't that funny, man? The lady Cori Bush from Black Lives Matter, Congresswoman from St. Louis, was calling the cops to arrest people in D.C. I said, wait a second. And she literally said, we got to defund the cops. And someone said, do you mean to, do police reform? She goes, no, we got to defund them. And now she's calling the cops. I mean, these guys are so hypocritical. This thing, I don't know if you all follow Michael Malice. You need to. Michael Malice, he's fantastic. He goes, look, you're not going to convince people. Just once, the liberals are not logical critters. They're just not. So you just, okay, whatever. Just nod your head and walk away. This hit me hard back in like the late 90s. I'll never forget something with Nancy Pelosi. I said, it was Nancy Pelosi, Feinstein, Nancy Pelosi, I could have sworn. Or maybe it was Feinstein, because they went after Bob Packwood from Oregon, and they basically banished him from the Senate, for being a perv. And then when Clinton came around, I said, they were like making excuses for him. I said, this is crazy. They banished Packwood because he's a perv. They did nothing with Ted Kennedy, nothing with Chris Dodd, nothing with Bill Clinton. I said, but you were just saying this other stuff like a year ago. Now you're saying this, and I'm saying this, to argue with the liberals. But the only thing that matters is right now. Literally, a liberal says, no, whatever serves my needs now. And that's when I kind of started getting creeped out by these people. I said, so you literally have no moral ground, nothing. There's no moral compass at all. You just whatever serves your political needs today. And I say, how do you build a political party on that? It's creepy. Well, you build a political party on that by hating, that building on hate. I mean, I tell you, man, my wife is on Facebook, and she has some liberal friends from when she was in high school who are just the hatred that emanates from them is disgusting. I'm just like, ew, it's kind of creepy. And I'm sitting there thinking, that's how you build a political party. That's how you build freaking I hate to say it, but that's where it leads ultimately to Auschwitz. You say those people are scum. They're scum. Those people are freaking cockroaches, and they need to be stamped out. That's how you do it. You build up the hate. The 2 minutes of hate, George Orwell, man. It's creepy. And I said, because I was sitting there thinking, and then as I watched, more and more, I said, man, these guys, it's like literally what they said yesterday is completely irrelevant to what they're saying today. It's just what matters today. It's creepy, man. I couldn't live like that. Let me just real quick too. At the end of the day, look, I'm a big fan of Trumpster. I'm a Trumpster, 100%. I'm not gonna miss him throwing people under the bus. I'm not gonna lie. That freaking pisses me off. The way he did Brian Kemp, look, it just pissed me off. And the way he did somebody else before that too. I forgot, but I was just like, dude, Trump, you had Manafort. You're the guy who hired the freaking Beltway inside clowns, Manafort. Some of these other guys, I think was Reince in there? Yeah, I said, yeah. And then the way I just look, I haven't followed it that much because I just don't care that much. But the hell? Why do you call people who support you? It's nuts to me. You're not. He's like freaking 10 years old. He's like, Puffy down here. I was like, look, I can't stand Puffy. Puffy got rolled. I get it, but the reason he's being like this because he's embarrassed that he got rolled. He wants to pretend like he didn't. I mean, he didn't think it was going to come out like this. And so he's by hook or by crook, he's protecting his reputation by saying there was no, you know what? It was fair and fair. We know it wasn't because he got rolled by Stacey Abrams. Stacey Abrams said yesterday on the freaking Rachel Maddow show, basically we rolled him. We eviscerated voter ID or voter signature checks. She literally said eviscerated it. And so Puffy, he's like, so now he's got a reputation to defend, man. He's got to say CYA. It's crazy. And so then Trump comes down on him like freaking stink on crap. And you're like, well, no wonder why he's going to put his back up, man. And then with Brian Kemp, I said, you could not have had a higher supporter than Brian Kemp to start with. Now, why did Brian Kemp choose Kelly Loeffler? Did Trump have something to do with that? I don't know. I think he might have. Because don't forget, Loeffler's husband was the chair of the New York Stock Exchange. You do think Trump and Loeffler and her husband did not run together sometimes? I bet they did. Which is just, that was a horrible choice. I said it back then. I said, dude, what are you doing? You could not have made a worse choice. But I bet Trump is in on that somehow. And then Kemp says, we're not going to close down. And Trump is on him like white on rice for that. It's just, why do you do your friends like that, dude? I mean, look, I expect it from the regular Republicans because we've been backstabbing each other for years in a circular firing squad. But Trump, man, it's like, what the hell? And now what he's doing this last couple of days, like, everyone is out to get you, dude. It frustrates me. It's like, I don't know if it's true, but I heard something with Pence and so I was like, oh God. Why? But at the end of the day, that's probably not the worst thing that ever happened because we can get someone Trump-like who isn't, he says, thin skin as Trump. It's frustrating me. I'm like, dude, what are you doing, man? But we saw it. It wasn't like we didn't see it before. Off your Louisiana too, and Carolyn, doesn't Louisiana got a Democratic governor? Yeah, John Bel Edwards. Interesting. So he'll be up. Ooh, that's the big ones. Kentucky and Louisiana. Both Kentucky and Louisiana run by Dems for the governor. That's interesting. Ooh, that's good. That's good call, Carolyn. You win the Schrute Award for today. You win the Schrute Bucks. Jeremy Rose was 6'7" in 1993. Wow. Oh, 6 to 7 years old. Okay, gotcha. If market dropped 20%, there'd be a buy rush in. Not necessarily, man. 20% isn't a huge drop. Don't forget, when that happens, people say it could go to another 20%. You see what I'm saying? Yeah, we seem to be due that there's tons of money on the sidelines now. And I've heard that for years and years and years, which might be one of the reasons why the market hasn't dropped. I mean, frankly, but what I'm saying is if I'm about to retire or recently retired, protect the bottom line. I don't think you're going to miss out on too much upside if you're protecting the bottom line, as Wellesley just proved to us. From 2020, Wellesley underperformed the S&P 500, but from 2010 to 2020, underperformed the S&P 500. But if you're pulling money out, it held its own. It held its own nicely. All right. Exit, yeah, California. Oh, you got to get out of California, my friends. All right, now I'm starting to get tired. It's 11 o'clock, so I think I'm going to get out of here. But did he really turn on Pence, Gary? I mean, did he? I completely agree more. Simple. No COVID, Trump wins 100%. Oh wait, Michael, how to retire early when most money in IRA? Oh, I mean, I don't get it. How do you retire early when most money is not in IRA? You start pulling it out. Are you saying because you're before 59 and a half? Well, you're going to have an issue to contend with when it comes to 10% penalty. I paid 10% penalty to start this business. Sucks, man. But I did, and it's worth it. And it will be worth it for you if you're in a crappy job. Lastly, I just want to say, yeah, I saw that. Yeah, Michael Mouse. Nah, we're not so screwed. Me, we rumble, yep. The main reason Puerto Rico won't become a state is the Jones Act. Reason they will is an insular case of the Supreme Court that make PR people have less rights as U.S. citizens. Yeah, and do Puerto Ricans want to pay income tax? Don't they pay income tax? Hey, Dan. Anyway, so what I was going to say is California, you've got to get the hell out of there, man. Now, my man Al, who's got solar, might not need to. But if you don't, I tell you, I'm just telling you right now, there's going to be a bigger and bigger and bigger demand, the load, because the mandates for electric vehicles and less and less and less supply. Generation nuclear, generation via coal. It's only a matter of time for they go after natural gas too. They're getting rid of hydro. They're getting rid of nuclear. They're getting rid of coal. I don't know what's going on with natural gas. I would presume they're getting rid of natural gas. So they're getting rid of the sources of electricity production, and they're going to put more demand. So they're getting rid of the supply and increasing demand. It is going to be, pardon my French, an S-hole, an S show, because you can't increase the demand because all the EVs, electric vehicles, it decreases, like Oakland. You can't burn natural gas in Oakland. No more natural gas in Oakland. So we still need electricity. Now I got to use electricity to cook my food. It's going to be fun. This is why I'm excited. It's going to be fun watching these idiots pay the price for the idiocy. I can't wait. I'm looking forward to watching California. All right, so here we are. So here we are right now. Here's our supply. Here's our demand, which is why they have the blackouts and rolling brownouts and stuff, right? That's the way it is now. They're getting rid of nuclear. They're getting rid of coal. They're getting rid of natural gas. They're getting rid of oil. And then they're increasing their demand on load because of EVs, because of getting rid of natural gas to cook food and stuff like that, to heat your homes, air condition, all that. It's all going to be more electric. Just I can't wait. It's going to be fun to watch, man. Yep. Nah, we're not, Dan. Just California, man. No, we're not screwed, man. Come on. No. Are you comfortable that Wellesley's bond can perform? Yeah, I mean, at the end of the day, you're going to get the coupon, and you're going to get the, they'll make sure, hopefully, that they're buying quality bonds that are going bankrupt. So yes, absolutely, you're going to get the coupon, which whatever it is, too. All right. But remember, if we are going into a deflationary economy, I'm just telling you, man, just look over the last 5 years. The country hasn't grown very much at all in the last 5 years from a population perspective. We have what I think I had on we had in the last 5 years, 1, 2, wait, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 states have lost population in the last 5 years. In the last year, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 states lost population. The country itself has only grown by like 6 million people in the last 5 years. That's it. We're the third largest country in the world, my friends, after China and India. And I think Brazil's coming up behind us, something like that. But anyway, we're the third largest country in population, and we only grew by 6 million people. And it's going to get worse. The baby boomers are dying off. No one's having children anymore. The immigration stuff, we don't have the same amount of jobs available as we did. We just don't. Immigration is slowing down. I know everyone's like, there's going to be a big surge because Steely Joe, whatever. But I'm telling you, man. And so if you have a declining population, the declining older people with less demand, less spending, GDP suffers. And GDP is driven off consumer demand. It's 70% of GDP. And if the people are dying and the people aren't spending, what happens to inflation? It doesn't matriculate. So now we're looking at low inflation, deflationary scenario a la Japan. Bonds look good then. Anyway, don't get too nervous. You're going to be fine, man. Yeah, the Wuhan. But see, and that's real quick. Freaking Trump. I mean, that's what, not just Trump, but the Republicans as a whole, McConnell, Pence, all these guys. Like, how did you not see this coming, man? The mail-in ballot stuff. I mean, come on, man. How did you not see this coming? Subscribe to man Rageaholic, the Razor Fist, I think is his name, over in Phoenix. Rageaholic. Got the best political analysis there is. Michael Malice is up there, but Rageaholic, dude, just subscribe to him. He said, dude, we call this in 2018 what we saw in Arizona. The fact that Republicans were caught with their pants down. I hate to say it because I think they relied on. I be perfectly honest. I think Trump talked a big game. I think he was writing checks his butt couldn't cash. Is that what it is? He's writing checks his butt couldn't cash. And I think a lot of people said, all right, Trump will get it. So it'll be a clean election. And he didn't. Now, at the end of the day, it's not up to him for a clean election. It is up to the states. But I mean, I don't know what happened to like with Brian Kemp and Puffy. I mean, I'm sitting there thinking it's absurd that we use the same group that Texas says, get the hell out of here. I mean, I don't know why there wasn't some coordination. Trump and the governor say, look, our seats are at stake and we can't get a clean, secure election. All right. I'm getting tired. I'm out of here, my friends. We'll see you guys. Thanks for being here. Appreciate long-winded